I'm Ava Makina, and this is the Coin Daily. Traditional risk assets bounced today, with volatility cooling and stocks regaining ground. But crypto didn't follow. Bitcoin is locked in its range, and Ethereum is flatlining when it should be rallying. The disconnect is everywhere. Price action is still, but tension is building just above support. Majors are stuck. Altcoins drift at monthly lows. And even where there are signs of strength, traders are getting almost no reward for risk. It feels like a lull, but under the surface, the market is shifting. The kind of calm where a single event can spill over fast. And Ethereum is the case in point. It's the one market that would be running with stocks if not for a fresh event risk. Right as things should turn up, exploit-linked Ether just started moving again. And with it, the mood on Ethereum has shifted. Funds tied to the Kelp DAO exploit are suddenly on the move again. 75,700 Ether, around $175 million, moved through a web of new addresses today, with some routed through privacy networks like Thorchain and Umbra. That makes the trail harder to follow and the recovery window even tighter. Arbitrum's Security Council did manage to freeze just over 30,000 coins, worth about 71 million, but that's less than half of what the attacker pushed out. The problem is no longer just tracing the original theft. It's about whether the networks and law enforcement teams can keep up before more of the funds disappear for good. This new wave of movement lands right as Ethereum was hoping to catch the broader risk rebound. Now, event risk is front and center, and the recovery timeline is narrowing by the hour. Ethereum stays on the sidelines, even as stocks and other risk assets gain. So, Ethereum's weighed down by forced flows, not sentiment. But Bitcoin is just as stubborn, despite a headline buy from the biggest public holder on record. Even record-setting demand can't pry Bitcoin out of its box right now. Strategy, Michael Saylor's firm, is back on top as the largest Bitcoin holder, beating BlackRock by buying over 34,000 Bitcoin this week for nearly $2.5 billion. That vaults its balance sheet to 815,000 coins, worth just over $61 billion now. But even with the biggest buy of the spring, the price hasn't budged from its range. The real tension is that these increasingly massive holdings pile up, but the tape stays flat. Ownership headlines mean less when the market just ignores them. The Bitcoin infographic shows Bitcoin near 76,038, with support at 75,977 and a break target at 76,315. Price is just above support and still below the upside trigger on this chart. So the setup is simple. Bitcoin is trading between nearby support and the break target. A move above 76,315 tests the upside, while a drop towards 75,808 puts the whole level back in focus. Even the biggest ownership leap isn't moving Bitcoin, and XRP is just as still after a major security roadmap announcement. The story isn't about sudden reactions anymore, it's about markets ignoring even long-term structural shifts. Ripple has unveiled a 4-phase plan to make the XRP ledger quantum resistant by 2028. The company isn't just talking theory. Steps start this year, including risk assessment, cryptography testing, and early work with Project 11 as a testing partner. There's an emergency plan for sudden threats, phased deployment, and a clear public timetable for a shift most other networks treat as a slow-moving risk. But even as Ripple lays out a path to harden the network against a next-generation attack, XRP itself barely ticks. The token's reaction was as flat as the tape around the news. XRP's candlestick chart shows price boxed between support at 142 and resistance at 143. Even after the roadmap, the range holds tight, without a clean breakout or slide. Technical gridlock dominates the reaction, for all the planning and engineering effort, and the public timeline. XRP's short-term tape simply didn't react. It's proof that in tonight's market, Even major system upgrades land like background noise, reinforcing how much technical inertia has set in for the large cap names. One ecosystem, 3 headlines, and 0 real movement across the majors. Event risk is active, engineering is happening behind the scenes, and yet price still refuses to confirm. To see why, you have to look at Bitcoin's technicals directly. The range is narrowing, but the dynamic underneath isn't what you'd expect. Bitcoin's tape is the core of tonight's cross-asset split. Macro looks supportive, equities are steady, but Bitcoin just coils tighter inside its band. Over the last 72 hours, every attempt to escape is met with a reset back to the middle, and all the headlines about ownership and inflows haven't changed the script. The underlying question is why every break attempt fails, and what it takes to finally break this loop. The evidence is visible on 2 fronts: the price structure and the market dashboard. The Bitcoin candlestick chart frames support at 75,865 and resistance at 76,481, with the last candle landing near 76,000. It's a compression zone. Price keeps snapping back to center instead of trending out, showing a failed resolution pattern. But what's more telling is the lack of follow-through beneath the surface. Breaks stall, traders don't commit hard, and volatility looks tame. To see what that means for conviction, the dashboard breaks down the internals. The market's pressure points aren't coming from big directional bets. The Bitcoin dashboard shows stress at 29%, breadth at 0 out of 12, and no advancing assets. Dispersion is 31%, funding is 0.11%, and liquidations are near $248,000 in a low volatility regime. No single sector is leading, and breadth is negative across the panel. Funding shows no strong lean, while low volatility suggests pressure is compressing beneath the surface. That leaves the market waiting for a sharper move once this compression gives way. That state of limbo isn't isolated to Bitcoin. The tension under the surface is driving smaller names into quieter breakdowns. The best example? Cardano, which is now trading right at key support after failing at its pivot. Cardano's setup tonight is about deteriorating structure more than dramatic price action. After struggling to reclaim its daily pivot at 24.917 cents, Cardano lost ground and is now pinned right on secondary support at 24.877. It's a clear stair-step lower and a warning signal for fading participation beneath the flat tape. The question is no longer about punching higher, it's about whether support can hold, or if the apparent calm is masking real deterioration. Cardano's candlestick chart pins support at 24.8 cents, resistance at 25.03 cents, and the last close right on the lower boundary. Multiple attempts to reclaim the higher band have failed. Price keeps pressing into support and not bouncing. There's been no spike in liquidations. In fact, forced exits sit at just over $100,000 in the last day. This isn't a panic sell-off. It's a steady fade. Under a consolidation regime, that quiet loss of structure is what pulls liquidity away across the board. The Cardano infographic marks price at 0.2489, with key support at 0.24877, a break target at 0.2492, and a hold target at 0.2486. That keeps Cardano balanced between nearby support and the first upside trigger. A push through 0.2492 would improve the short-term tone, while a move toward 0.2486 would put the hold level under pressure. It's not all breakdowns. There is still the occasional outlier, and Litecoin is showing what a constructive setup looks like, even if it's not a full escape. Where most coins are fading, Litecoin is quietly making progress through a crowded pivot band. Litecoin's latest close at 55.42 puts it directly into a stack of pivots. It's not a runaway trade, but it is one of the few places where price is pressing higher, challenging resistance at 55.43 and testing whether it can convert overhead levels into a new floor. This tight ladder creates a minor breakout scenario, tiny but notable in an otherwise frozen market. Litecoin's candlestick chart places support at 54.90, resistance at 55.60, and price near 55.42. The levels are tightly packed. Price is fighting to turn a dense resistance zone into support inside a narrow range. Behind the scenes, this move isn't being driven by forced liquidations. Only about $18,000 closed out in a day. In a tape where almost every breakout fizzles, even marginal strength attracts attention. The next real test is close. Whether Litecoin can stick above its upper pivot band or get slotted right back below resistance again. Litecoin's infographic marks resistance at 55.43, a break target at 55.47, and a hold target at 55.38. There's little distance between levels, but in an inactive market, that separation matters for confirmation. If Litecoin can close above 55.43, it's a rare constructive setup in a tape starved for momentum. If not, the move gets rejected, and we're watching another round of rotation back to flat. In this environment, small breakouts get noticed fast. They're signals of structure, not of trend, and they need validation. With so few places showing progress, the near-term test now is on Avalanche. After a recent anomaly, Avalanche is at a live pivot where its short recovery could either confirm or fall apart, depending on a single level. The Avalanche map has narrowed to one key number tonight, 936. The latest candle closed at 937, putting price almost directly on top of the pivot that's made the difference between breakdowns and rebounds this week. After moving inside a tight range from 902 to 946, Avalanche sits at a decision point. Can it reclaim overhead, or are buyers tapped out already? Before that immediate pivot comes into view, the broader Avalanche setup is already narrow. The asset has been trading inside a recent band from roughly 9.02 up to 9.46, so the market is entering this decision zone with very little room for hesitation. The Avalanche infographic shows price at 9.37 with key support at 9.36, a break target at 9.39 and a hold target at 9.35. That puts the immediate decision right around the pivot. Tonight's market is a masterclass in hidden stress. Calm on the surface, boxed in at every major level, but event risk, receding participation, and pressure at support are building. The open question: does a catalyst break things open from the majors, or does weakness thin out the alts before anything bigger can move? When the turn comes, compression guarantees the release won't be small. The lull never lasts forever, and the tension entering tomorrow is only getting heavier. Which matters more right now? Majors like Bitcoin stuck in range, or event-driven volatility in altcoins you hold? That's your daily market close from the Coin Daily. Subscribe so you never miss the roundup.